Today we're talking about Opendoor as we move toward the close of the Monday session on December 1st, and the theme of this update is simple: holding steady in the turbulence. Because even though the stock is trading lower today, sitting around $7.26 and down about 5.5%, the story behind the move is not Opendoor specific at all. This is one of those sessions where the entire market environment is pushing high beta stocks lower, sentiment across the board is soft, and volatility is being driven by macro forces rather than anything happening inside the company. So let's break down exactly what's going on, and more importantly, why a day like today doesn't actually change the bigger picture for Opendoor. When you look at the major indices and broader tech today, everything is down. Risk-off flows are dominating the session. This is the kind of market where liquidity narrows, buyers pull back, and most momentum names see outsized declines relative to the index. High volatility stocks get hit harder, defensive names hold up better, and algorithms lead the action. In that environment, a 5 to 6% move for Opendoor is completely normal, because the stock trades with a high beta and reacts strongly to big macro swings. And here's the key: there is no new negative news for Opendoor. Nothing happened over the weekend, nothing happened this morning, nothing came out during the session that would justify a company-specific sell-off. This is purely the market dragging everything down. It's a turbulence day, not a red flag day. In fact, if you look closely at the company's communication over the past couple of days, what you actually see is a reaffirmation of forward momentum rather than anything concerning. Kaz posted a simple but telling message: faster. Now, with Kaz, you're never going to get long paragraphs or drawn-out monologues. What you get are small signals, one-word or two-word messages that hint at the internal mindset and the operational tempo inside Opendoor. When he says faster, it's not about share price. It's about execution. It's about iteration. It's about speeding up the things they're working on internally: AI-driven valuations, operational workflows, improved repair assessment systems, growth scoring tools, and the broader vision for Opendoor 2.0. It's a sign of intensity, not hesitation. And then we have Eric Jackson, who once again reminded everyone that the stock is, in his words, not $82 yet. That might sound light-hearted, but it's actually important. When someone with a thesis as ambitious as Eric's repeats this point on a red day, what he's really saying is simple: the long-term target hasn't changed. The short-term turbulence is noise. The story is much bigger than a 5% down session. This is what long-term conviction looks like: acknowledging dips without being rattled by them. Another point worth highlighting is that Opendoor has just gone through a period of serious volatility around the warrant dividend, the ex-date, and the holiday shortened session. The stock spiked, it pulled back, it tried repeatedly to push through $8, and then it came down again on thin trading. This kind of chop is exactly what you expect after a catalyst like that. Warrant mechanics almost always create waves. They create confusion. They create quick rotational trading. And they create emotional price action that tends to settle only after a few sessions. Right now, Opendoor is entering what looks like the consolidation phase after all of that volatility. The $7 range is starting to show signs of becoming an accumulation zone. Buyers are stepping in around these levels. Shorts are pressing when macro sentiment weakens. And neither side has full control. That's what a consolidation band looks like. It's a tug-of-war where, over time, one side starts to build strength underneath the surface. What matters is what's not happening. There is no breakdown in the chart. There is no collapse in volume. There is no panic selling. The price action today isn't disorderly, it's just soft, because the entire market is soft. And that's why this is a moment for steady thinking, not emotional decision-making. When you zoom out, the fundamentals of the story haven't changed. Opendoor is still coming off a quarter where acquisitions were tracking close to the high plan. The company is still rolling out improved technology designed to make the cash offer pipeline more accurate, more scalable, and more efficient. The hackathon improvements that saved thousands of operational hours haven't suddenly disappeared. The new scoring system for targeting growth markets is still being implemented. The shift toward faster, leaner, more transparent operations is still underway. Everything that mattered on Friday still matters today. Sometimes the hardest thing for investors to accept, especially in a volatile name, is that days like this really don't mean anything. The market goes through cycles. Some days push stocks up. Some push them down. But without new catalysts, these moves have no deeper meaning. They're just part of the rhythm of trading. And Opendoor is the kind of stock that amplifies the rhythm. It overreacts to the upside on green days and overreacts to the downside on red days. That's part of the package when you have a company that's in the middle of a turnaround story and priced at a level where small shifts in sentiment create big percentage swings. The more important story today is the message underneath the turbulence: holding steady. Because the one thing Opendoor is showing right now is that it's not a company falling apart. It's not drifting. It's not confused. It's not directionless. It's actually becoming more focused, more disciplined, more serious about execution, and more open about what's working and what isn't. Kaz is bringing a tone of simplicity and clarity. He posts little, but when he does, it's deliberate. Eric Jackson is continuing to anchor the long-term vision. Analysts and insiders are paying attention to the operational improvements that have been coming through. And the stock itself continues to move within a predictable band rather than a chaotic freefall. In fact, when you put today into context, it becomes even clearer that this is not a day to read too deeply into. A 5% pullback is a blip for a stock like Opendoor. It's the kind of movement that gets reversed whenever sentiment rotates back into high beta tech. And because there's no fundamental shift behind the move, the stock can just as easily recover a chunk of it tomorrow, or the next day, or sometime later in the week. That's why the right mindset right now is to stay calm in the turbulence. Hold steady. Let the market finish whatever macro-driven pullback it's going through, and then see how Opendoor behaves once things settle. If the stock holds this $7 zone, builds a base, and starts edging back toward $8 at the next opportunity, that will be a much clearer signal than anything happening today. For now, the focus is patience. The focus is perspective. The focus is remembering that not every red day means something. Sometimes it's just a red day in a red market. The catalysts that matter, the operational improvements, the leadership tone, the long-term structural promise of the warrant dividend setup, are still intact. So as we move toward the close of this Monday session, the message is simple: turbulence isn't the thesis. It's just the weather. And weather passes. What matters is whether Opendoor stays on course during the storm. Right now, all signs suggest it is.